Hello, everybody, and welcome to this new edition of Food Thoughts. Today, I have the pleasure to speak with Steve Molino, who is principal at Clear Current Capital, a venture capital focusing on food tech. Steve, how are you doing today?
I'm good. How about you?
Yeah, I'm very good. Thank you. I can't complain. I'm recording this from Mexico at the moment. Thanks for taking the time to speak with me today. I think that, the first thing we would like to know, especially the listeners, is who are you? What's your background, your profile, and what led you to work in this space?
Yeah, sure. So, who am I and how did I get here? So, right now I'm a principal at Clear Current Capital. So, as you mentioned, we're an early stage venture capital fund focused on the sustainable food space, and I can get into that in a bit. But my background, I've mainly been in the financial services industry throughout my career, with the exception of a short stint in strategy consulting for a couple of years. But basically, I started. I worked for a major bank doing something more like a strategy role, and then I moved over to the investment side. By first, I was on the derivatives trading floor for a little bit with a large institutional investor, and then within that same firm, moved over to the private equity and venture capital team, so the alternative investment unit there. And I fell in love with VC and private equity, and I love that whole space. But long story short, I woke up to what was going on in the food system and it became an obsession. And I basically said, I like the VC side of things. So, how can I keep doing what I like to do, but now focus on what I care about, which is sustainability in food?
No, that's good. That is interesting, and I think that we will during this conversation definitely talk more and dig deeper, especially around impact and sustainability and ESG, because these are three words that we constantly hear now more and more over the past couple of years. Whether we're talking about VCs, Ps, or big corporations, everyone is advertising their sustainability programs or ESG and impact. But do we really know what's that mean, and what are we talking about? What's behind the banner and the advertisement? So I think that that's very interesting to have someone who works on the VC side and who works specifically around sustainable food type of systems to talk about that with us. But first, maybe you can tell us a little bit more about your VC and what you guys are doing in the space.
Yeah, sure. So, for us, so Clear Current Capital, we're, as I mentioned, early stage venture investors in sustainable food, but more specifically, we have the traditional venture capital side of things where we look to give our investors venture capital like returns. But separate to, or not separate to that, but additionally to that, we are a fully mission driven firm. So, our mission, in essence, is to facilitate the shift away from industrial animal agriculture. So everything that we do as a firm, everything we invest in, it all goes back to this idea of, can this potentially help shift us away from reliance on industrial animal agriculture within our food system? So from an investment standpoint, that leads to us a lot of times focusing on some certain pillars such as plant-based, cell-based, any type of fermentation. So it could be gas, precision fermentation, biomass fermentation. And then we've also been looking at newer areas such as molecular farming. We have also invested quite a bit and continue to look at the enabling technologies across all of those industries, which are more B2B players that focus on key or critical components in the supply chain for those industries. And we invest pretty early. So we don't do idea stage companies where it's really just an idea on a napkin, but we'll invest pre-revenue. So it's not something where we require revenue for our companies. So we like to get in when you're really at that inflection point of prototype, proof of concept, but now it's time to commercialize. And that's kind of what we love and where we'd love to come in.
No, that's good. And I guess that leads also to what I wanted to ask you next, which is, what's the differentiator? Because at the end of the day, as a headhunter specialized in food and ag and doing a lot of work in agri-food tech, I see a lot of venture capitals who are investing in that space. Some of them are claiming to be really specialized and only do that. Some others are a bit more generalist and investing depending on the opportunities. What's the differentiator, and then why Clear Current Capital and not another VC?
Yeah, no, it's a great question. And I mean, I think that's a question that should always be asked of any venture capital firm. I think for us, so the differentiation comes in a couple of ways. So one is really just the expertise specifically focused on alt proteins and sustainable proteins in general. So there's a lot of firms out there that do a lot of good work across ag tech or farm tech or just like the overall climate, which is fantastic. But given our sole focus on the alternative protein space, or what I actually like to call it sustainable proteins as opposed to alternative proteins, but our sole focus in that area, it leads to us really having a deep understanding of the critical needs in the space. So we're able to really dig deep with founders on our end from a diligence standpoint, but also once we've invested in a company, we really truly recognize what the main pain points are to growth. Which if you're a more generalist investor, you might be able to figure that out, but it takes more time, and obviously your attention is focused on many different industries and problem areas. So the specialization is something that I think is a differentiator for us. And then also that leads to us having a differentiated network of resources. So all of our resources that we like to bring to our companies are all focused on things that have actually been beneficial over the years that we've been investing as a firm, which is since 2017. And those have all been proven to be helpful for alt protein companies in this space, whether it be plant-based, fermentation, cell-based. So again, our resources and our network is all specialized, focused on this space. And then finally, I mean, I like to think of this as a differentiator, and it's been impactful over the years. But after we've made investments into companies, they can think of us as truly a trusted resource where we generally invest in other mission-driven founders. It's not a requirement, but most of the founders are in this for a very specific mission like us. And it could be on the animal welfare side, it could be on the environmental side, but the companies mean something to them. And having us as part of their cap table and support system, we tend to be investors that they come to for true guidance and support around questions that they might be nervous about asking just more generalist investors that are purely financially driven. So it leads to a really good relationship with our founders that's trusted, and it's beneficial long term.
Okay, yeah, no, that's very clear, and thanks for that answer. I guess what would be interesting to understand is what are the key indicators that you are using to invest in one startup and not another one? What are the key indicators? Because, and I was reading an interesting piece about that the other day. For a few years now, because FoodTech was so big and there's this whole bubble that was created around it, there is sometimes buying in the story, buying in the KPIs. Lately, I mean, in the past 2-3 years, it feels that sometimes it was more buying into the story and not looking enough at the KPIs, or having a difference between reality and expectations. And you wrote an interesting piece on that as well. So what are the key indicators for you to feel that, okay, we are going to invest in this specific startup?
Yeah, I mean, it's a great question. I mean, that's the $1 million question for any investor or company out there, right? And for us, I'd say that overall, and this is probably the annoying answer that no one likes, it's less of here's a specific metric or KPI that if you hit these, then we're in. And it's more of back to the basics of, are you creating a solution to a real problem, an actual problem that exists in the marketplace? And are you doing so in a way that creates value for you and whoever your end customers are going to be? And is this differentiated? Is this being done by 20 other companies? Or is this, are you one of maybe, are you the only one, or are you one of 2 or 3 that are doing this worldwide? And then so like that's a need, that's a necessity. Where I think, looking kind of like at the plant-based space, for instance, there's been a lot of companies over the years that have been created where they really weren't necessary. There's a lot of those types of companies already. So do we really need many more of them? And sometimes the answer is no. But with that, all that said, like solving an actual problem that exists in the marketplace with an innovative solution that creates value, for me, it really always goes back to the team, which is the least KPI heavy thing that you could ever bring up. because how do you quantify qualitative information about individuals? It's really difficult. You basically can't. So for me, if two companies were exactly equal in their solution, their offering, the problem, and all of that, if I had to pick one versus the other, it's always going to go back to, do I believe that the team is the right team to drive this forward and take this to the next level?
Yeah, it goes back to human capital assessment. Welcome to my
100% of the time.
recruiter world.
Exactly. And I mean, like, and that's why people like you are so valuable, because at the end of the day, especially at the early stage, the only thing that matters really are the people. You can have amazing intellectual property or a differentiated approach. If you can't execute and create value well, then none of that matters. None of that matters. It's all about the people.
Can you make it happen? And I think that part of your job, which is not easy, is to assess the interactions between the team and spot any, potential problem, or make sure that, they're going to work really well together and there's no tension. So
yeah, and that's a really good point. And that's what has been one of the good things for investors in the space when the market has shifted a little bit back to reality over the past year or so, is that now we have more time to due diligence, and looking at those interactions between co-founders or even the founders and other individuals on the team to see, is everyone on the same page? Does it seem like there's a good culture? Like everyone likes working together? That's really hard when you have 3 weeks to due diligence and make a decision versus you could take your time and really dig in. So I've appreciated the pullback a bit, because appropriate diligence is important.
100%. And going back to what you just mentioned, the fact that I think the overall industry came back to somehow more reality or more real expectations after a massive investments in food tech over the past few years, and especially around alternative protein. We have several names coming in mind straight away: Beyond Meat, Impossible Foods. Last year has been quite difficult. The impact on this year is that venture capital are much more cautious in their investments. And when you speak with incubators, accelerators, and startups looking for some funding, they're saying, feels like it's going to be tough.
Yeah.
So again, I wanted to go back to your perception and in the article that you wrote that was very interesting around what, in your opinion, do you feel that the failure came from, that all this momentum that FoodTech had and these alternative protein companies had? Where do you feel that it went wrong, and how can we change that so that there's not a negative impact on what some people like to call alternative 2.0 and 3.0 and everything happening around fermentation?
Yeah, I mean, that's a great question. I mean, so on like where things went wrong, I mean, this might seem odd. I think that the conversation needs to change a little bit, where I don't think things went wrong or that the space has failed. So that's one of the points, that there's a lot of things that I wish went differently and wish went more smoothly. But like, and what I mean by that is kind of this idea of like, let's take Beyond Meat, for instance, right? Like, and I kind of mentioned it in that piece, where at some point it was valued at $14 billion market cap, and now it's at $1 billion, and that's such a failure. It lost $13 billion of value from a market cap.
Yeah, that was insane.
It was. But like, one of the things that, so like, it looks like a failure, but in my mind, that's a company that, what was it, 2009 that it started, sometime around then. It didn't exist, and now it is worth $1 billion. And also that $1 billion is roughly a little over 2x revenue, which is exactly where CPG companies should trade. Yeah. So I see Beyond Meat as still a massive, massive success. It's $1 billion company that's now trading in an appropriate valuation. So, and you could say that the same for a lot of these companies in the space, where I think the failure is really around expectations, where like, and that could be expectations from startups, from investors, from journalists, from anyone, from consumers, really just around this idea that it's going to change the world overnight. And I think that's the failure to be grounded in reality, where this is going to take a really long time. Like the meat, just look at the meat market. 300 million metric tons of meat are produced and consumed annually every year. 350 million metric tons. That is so massive. Beyond Meat is not going to take that over overnight. Impossible Foods is not going to take that over overnight. It's likely that the plant-based space will never take that over overnight. We're going to need so many different solutions. So I think the failures around expectations, and we should just adjust expectations accordingly. And then I think, like moving forward, I think it's just like thinking of that throughout the entire process of a company's life cycle is important, so that at no point are they hyper overvalued, and then need to have major down rounds where it dilutes the founders, and then the founders aren't interested in pushing forward anymore because they barely own what they're building. So I think it's just keeping expectations based on reality throughout the whole process is really, really important.
Again, I totally agree, and I think that that's where the main problem came from, the fail so wrong advertisement.
Mm-hmm.
And expectations. Fail so wrong advertisement, either it comes from journalists or from a strategic consulting companies, whether it comes from the startup itself saying, hey, we're going to change the world, and people actually believe that. And I think that's the other problem, was maybe the private equity expectations, who were not necessarily specialized in agri-food tech, and we're seeing these companies as just another high-tech company, and not considering them as a food company. And I think that you were mentioning that as well.
Yeah,
it is a
100%.
company. It has to be, you need to have your pilot unit. You need to work on all the industrialization of that. And this is probably where it comes from. Now, from there, what are the conclusions that we can, take out of there, especially in terms of, we're not going to change the world just like that. It's going to be step by step. Therefore, there is a need to find an interesting way and a proper way to integrate alternative proteins space and the cultivated meat space in the global meat industry. So how do we do that? Because it feels that today, it's not the case.
Yeah, that's a great question. And I think for me, that all comes back to the consumer. So, and what I mean by that is, there's the obvious problem that we're trying to solve with sustainable proteins, which is around the environmental impacts of industrial animal ag, and then everything, or animal welfare associated with that. Those problems are obvious, but the problem that I think a lot of companies, or the space as a whole, is forgetting to focus on are the problems for the consumer. Because yes, there's those problems from industrial animal ag are obvious on environment and animal welfare, but the consumer is not making their actual food purchasing decisions with that in mind most of the time. Maybe some consumers are, but there's almost 8 billion people on the planet. I can guarantee you that 7.9 billion of them are basically making their decisions based on taste, convenience, price, and those types of things. So if we want to integrate sustainable proteins into the food system alongside the animal-based food system that we currently have, and kind of strip that back a little bit so things are more sustainable, we need to go back to the consumer's problems. Why would they choose a product over something else? Is it affordability? Is it taste? Is it health? Health is definitely right now the number one thing that's on most people's minds. So I think addressing the consumer's problems for food, that's the key way to do it. Because you don't want to say, change your behavior because it's good for the planet. You want them to say, I want to change my behavior because that tastes amazing, or it's super affordable, or my doctor says it's super healthy for me. That's the way to really make it a much easier transition.
How are we going to do that with cultivated meats? Because I think at least the first rounds of commercialization are not going to be cheap. So maybe they're going to do directly with restaurants, and it's going to be higher end restaurants. But yeah, we're going to have to find a way to make it affordable.
Yeah, cultivated is a very specific one, right? So like that one, people might disagree with me. I think of that as more of a bigger potential solution for 50 plus years from now, where this progress that's being made right now is absolutely necessary, and it will solve a major future problem of people who will never give up meat, but they want it in the early days. So the next 5 to 20 years, I really think it's going to be a niche product, super premium. Most people won't have access to it. It won't be supplied in large quantities. But what that will allow is it'll prove out the financials around it so that more money can flow into the space, and continued innovation is going to occur. So big bottlenecks today that are keeping costs up or scale relatively low, successes with the current companies will allow for the continued innovation to address those key challenges. And some point in the future, I would love to see cultivated in 2050 or 2100 be 10-20% of the meat consumption, but that's going to take a long time, a lot of capital, and so I think that's more of a much longer term play. And unfortunately for the current startups today, I really think it's going to be a first mover advantage. So the ones that have been around for a little while, whether it be like Blue Nalu or Wild Type or Upside or Moza Meat, I think they'll be the winners simply because vertical integration and creating a new industry is super hard. It takes a lot of money. So, and maybe I'm wrong with all that, but that's kind of how I think about cultivated.
No, that's a very interesting angle and point of view. I'd like to take the last few minutes that we have to maybe hear about a few of the startups that you're funding that have some news that you would like to talk about.
Yeah, sure. I'm always happy to talk about that. So, I mean, I could think of our portfolio in the different categories. So like plant-based, cell-based, or fermentation or enabling tech. One of the most fun ones that I like to talk about is Change Foods. So Change Foods is basically trying to give people real cheese without the animal. So they're using precision fermentation as their technological approach, creating real dairy caseins and real lipids that you would normally find from animals using precision fermentation. And precision fermentation is what I think is going to be the short to medium term true success, because that technology has been proven at scale, but more in the pharma industry. So now the challenges are figuring out how to scale up things for the food industry so that you could reach commodity price points, which are super, super hard. But it's going to be around that, improving yields for the microbes to produce these proteins and fats at high quantities. But it's very exciting, and I'm very interested to see how they develop. The team at Change Foods is unbelievable. So again, all goes back to people and team. I talked to a lot of precision fermentation dairy companies over the years. And when I met David and the team at Change, it was kind of like, we need to keep talking. And then we did. And over time, it was like, I'm super excited to be supporting on their journey. So that's one. Another one that I think is interesting to point out is in the plant-based space, which on the surface, they look like a plant-based CPG company, and they are, but beneath them, there's actually a big technological backing to this. So this is Umaro Foods, which is, they make a plant-based bacon at the moment, and it's a plant-based seaweed protein bacon where their story is so interesting, where they went to raise money as a seaweed ingredient company.
Yeah.
And we passed on them. We're not going to do just a pure commoditized ingredient company. And they got advice from someone else in the space that said, show people what you can do with the protein that you can extract from seaweed. No one else can extract protein the way that you can from seaweed. That's your IP and all that. So show people what you could do with it. And in a very short period of time, they not only made a bacon, but they also created their own fat encapsulation technology to include in the bacon, which they have IP around. And for us, the bacon is incredible, but it kind of blew my mind where there's some plant-based fat companies that are doing fat encapsulation, and that's their whole company. That's the entire business model. And Beth and Amanda at Umaro were able to just quickly pull that together and create the best bacon product I've had in a short period of time. And again, going back to team, it's just like, those are the people to back. And another reason that they're so exciting is there's an upper limit to what you can do with soy and wheat and pea protein, basically the stuff on land, the terrestrial plants. I think of Umaro as, yes, creating an amazing bacon, but they're unlocking the ocean as a protein source beyond fish. So now it goes back to plants. So I'm super excited about them also.
Okay, well, that's super interesting indeed. And for people who I guess are interested in getting in touch with you, getting in touch with Clear Current Capital, having more information about some of the investments that you're doing, what's the best way to do that?
Yeah, I mean, an easy one is reach out to me on LinkedIn. If I don't know you, just shoot a little note over like why you want to talk. If there's a note in there and it says why you want to talk, I'm gonna respond. I'm gonna answer you. So you could either do that, or Clear Current does have our inbound option on our website if you want to reach out through that, and we read every single one of those. So, but yeah, I mean, I like talking to people. So it's, if you want to talk, just reach out.
Awesome. Steve, thanks for your time. It was really a pleasure to speak with you and then have your take on all these very hot topics. And I hope we'll do that again very soon. Thank you.
Yeah, thank you, Ruben. I appreciate it.